How have you seen property managers' jobs change over the years?
You know, they're constantly changing. Again, looking at the history of property management, it originally started on the engineering side, and over time, you know, as owners shifted away from handling interaction with tenants directly, the property management role moved from engineering into more direct management activities, not only with the tenants, but with all of the vendors and maintenance and construction management and leasing management as well. So what's happened over time is that the amount of time available for a property manager to focus on any particular issue has shrunk dramatically. And 20, 25 years ago, it was probably a lot easier for a property manager to have the time to dedicate to learning all the nuances about escalations and how to deal with them and how to communicate those to the tenants, because that's a big part of it too. But they don't have that luxury anymore. They've got so many other responsibilities. I like to sometimes say that the property manager's desk is the dumping ground for problems that other team members have. You know, whether it's a leasing agent or the owner or an asset manager or an engineer or an accountant. And the property manager is kind of the hub of a lot of information wheels. And so they need products that help automate, you know, all of these different functions that they get involved in.
I'm sure managers in that position feel that statement when they hear it.
Yeah.
How did the journey that you started with Larry lead you to where you are with us today?
It's been a surprisingly circuitous path. Larry and I have reached the age where, you know, retirement is something that's, you know, not only pending but important for us.
Of course.
And last year, you know, we notified our client base that we were in the process of pursuing that and shutting things down. And one of those clients, in fact, one of our largest and most important clients, reached out and talked with QSource and suggested that we start having conversations together with each other about coming up with a way to keep AOE in business, you know, as opposed to us just completely shutting it down. And so we had many conversations about it, and it led to a nice partnership that we now have in place. And the future of AOE is clearly in QSource's hands. We can talk a little bit about what that means. But the other aspect of it is that QSource brings capabilities to the table that we didn't have and don't have. And those revolve around software capabilities and programming. We had the same programmer for 30 years, did a terrific job. And yet, you know, he's on the edge of retirement as well, and so it made sense for us to do this. The other really important capability that QSource brings to the table is AI. I know how to spell it. Beyond that, I know very little about it, although I'm really excited about the potential that AI has to change a lot of things. What we really expect AI to be able to do for AOE is to make it simpler and to automate processes. So if one of the ways I like to look at our product is that, you know, our overall goal is it's really simple. It's to create an accurate invoice. And the only way to do that is to have a standardized input process, which we really nailed. You know, we did a great job of coming up with that, and that's the reason that that the invoices that we create are really good. It's also the reason that our reporting out of AOE is exceptional. No one else has any of those reporting capabilities, and I can talk about those reports in a minute. But so the input process is difficult, right? It's many steps. We were able to automate the output process, by having a real standardized input process. And so the output, invoices, reports, and so on, is automated, and it's really very helpful for managers and owners and others like accountants. But the input process is still tedious, and I really believe that QSource has the capabilities of bringing AI to bear on that process and to automate that through reading lease documents and picking up on each of those individual lease clauses that I've mentioned.
Yes, when our group originally spoke with that client that you mentioned, that was the number one comment from everyone we spoke to, was they searched the industry and could not find a program that could match what AOE was doing for them.
Oh, that's great.
So they were very eager to continue that legacy that you had built.
Well, it's fortuitous for them and for you and for us as well, and I think we have a good partnership in place to keep it going.
What are some examples of the types of reports that AOE offered that could be more beneficial as this customer shared?
Well, we have a total of 20 reports plus the invoices that I referenced. And rather than go into a long list, some of the highlights are, we have an expense cap report, which backs up, say for an auditor, if in their lease, an expense cap is negotiated and the tenant isn't supposed to pay for anything above and beyond a certain level, right? Well, that's a standard feature that we have built into AOE. Other software applications don't typically have that, and to my knowledge, actually none of them do. They may by now, but and we have a report that substantiates the exact math behind the expense cap, and so that's a very, very helpful one from an audit perspective. We also have two different ways of handling the gross ups. We have what's called a total cost gross up approach, which ties back to individual contracts for different vendor services. And we also have a percentage adjustment approach, and that approach can be used for some variable expense adjustments that don't fall under the total cost approach. And so we have reports that tie back to how both of those gross up processes are created. And again, that helps with the audit review process to where they have a lot of trust in how the numbers were arrived at.
And I'm sure these reports weren't overnight, right? This was 25 years of continual additions and tweaking to make sure that it was just right.
Exactly, yeah. Now, those same reports are going to continue in QSource's upgrade to QTREN, right? And so all of those 20 reports, all of that output will continue to be automated. But what's really, really important is that the input process is being automated as well. And that's where the real gain in time savings comes from through QTREN, right? And that platform also is structured to add on additional modules above and beyond the escalations. So,
what are the core principles within AOE that have remained in this transition
to QTREN?
To QTREN.
What I really appreciate is that QTREN will continue to include all of the input steps that we have. We have a section called walkthrough steps. It's about 21 steps, and all of those are being preserved. And that's really the key to maintaining the flexibility of the software to make sure that it continues to capture all the unique lease provisions. Also, the output is remaining the same. All of those reports that auditors need and that accountants need and that owners need in order to understand what they're doing, those will be preserved. You know, one of the really important reports and uses of AOE historically, from my perspective, has been related to CapEx that can be amortized. If you're preparing your budget and you want to optimize the recovery of your capital amortizations, AOE and now QTREN can, if you model it properly, you can use it to tell you, should I do that capital repair this year or should I do it next year? Because what happens in a multi-tenant office building is that leases expire, right? And those leases that expire, they get a reset in the base year. And when that happens, any CapEx amortizations that preceded that reset can drop off, right? And so you can look at the timing of when you, in your budgeting process, you can look at the timing of when you actually make the expenditure for a big capital improvement that is cost saving and therefore typically is recoverable. You can just make a decision, which year should I do it in? So that alone will pay for the software.
The new version is going to be more intuitive and prompt driven. How important do you think that will be to the property managers?
I think it's huge. The learning curve will be a lot quicker, and the time that it will take for a property manager or property accountant to use the software, I think it'll just be faster and just much easier to use because of the AI contributions and the time that can be saved by reading leases and so on.
The introduction for integration for the current accounting softwares that these companies may be using, do you see that as being a beneficial addition as well?
You mean integrating with additional software packages?
Yes, with their current software such as Yardi, MRI, Excel,
Absolutely.
things like that.
Yeah, I think that's huge. Yeah, that's something that we looked at before, but from a programming standpoint, it was beyond our skill set.
Well, so I'm sure the property owners will be excited to see that.
Absolutely, yeah. It'll also be important to MRI and to a lesser extent maybe Yardi. My point is that all of these packages, general accounting, commercial real estate packages, they have escalation modules, but so many of their clients don't use them because they don't capture everything. So if they have the option of plugging AOE into their system or having their system plug into AOE and transfer information, it's a real game changer for those software users.
To alleviate some of that manual entry for them.
Exactly.
How important is data security when you're talking about finance and lease information?
Yeah, it's a big issue, and it's important. We've always included a high level of security in AOE, and we know that's going to continue with QTREN. Those leases and the lease information are the foundation for the entire income stream for an office building and for the resulting value in that building. So all of that information needs to be kept confidential. What an agreement that a tenant has with one landlord, you wouldn't want another landlord to be able to see it. You know, so yeah,
Privacy is important.
Yeah, top of the list. That's important.
After meeting with the current AOE existing clients, we've gone through what their pain points are, areas of concern, and what we've discovered is that most of these clients are using some 3, 4, 5 different softwares to manage these properties. These type of integrations, as we discussed, do allow them to bring the budgeting software together, as well as one of the areas we've discovered has been a big issue for several of the clients is just tracking their certificate of insurance, which is also known as a COI. Right. This is going to be the first add-on module that we have completed for this upgrade from AOE to QTREN. Do you agree that that is an important first step as far as the upcoming modules and exciting new features that we'll be able to integrate within and allow everything to flow all together rather than having all these multiple systems?
I do. I think I know how many different vendors, property managers, and office building owners in particular, industrial, building owners how many different vendors they get involved with, and those vendors provide a lot of different services, and it's important for them to have insurance in place and to track it properly. To make that easier, I think, is really a huge step, and I think it's one additional feature that the QTREN platform can add along with others, and I know you have others in mind downstream. And so yeah, I think it'll be very useful and good to have it in the same package.
So in your opinion, what is it do you think that the current users have loved, and what do you think is something that maybe they were looking for to see changed and that may bring some past users, give them excitement and want them to rejoin the platform?
Sure. The features that our users, past and present, have really liked, and it is all of the information that it automatically generates, right? And the standardization of it, and the error-free schedules and invoices that they get from it. Some of the pain points, though, have mostly revolved around the input process. It's tedious. There are a lot of steps. It's important that they all be addressed, right? And so, for the users that continue to use it, they've gone through the process. Once you put a tenant in there, they're in there, and you don't have to make any changes to their profile unless their space changes or it expires or whatever. They'll automatically roll off if they don't renew. But that input process, it takes time and dedication to doing it properly. And so I think smoothing out that process, making it easier where the information is, for the most part, is automatically collected and input, I think that will help a lot. I think it will have the benefit of bringing past AOE users back. Some of the users that we have lost over the years have been to those who don't have the staff to dig into the level of detail that they really need to. And they have compromised and kind of gone with accounting systems that have weaker escalation modules, right? And they have to live with that, right? And but I think making that input process simpler and more automated, I think it's a huge change, right? The other benefit of the AOE methodology is that it's the only methodology that's specifically approved by BOMA International, right? Which goes back to our handbook. They endorsed the methodology in the handbook, and that handbook's methodology continues to be used in AOE and QTREN. And so I think that gives a lot of comfort to landlords and to tenants that the invoices are going to be generated properly.
Yes, I would imagine, especially from a tenant's perspective, that to know that they're using a software that has been looked at and approved in that way would be very comforting.
Right. What's unfortunate is the tenant doesn't have any say on what software gets used.
Right.
So their auditors will know which ones are doing a better job than others. So that's kind of
But that would be a great incentive for the landlords to have that, to develop that relationship with their tenants and make it a stronger trust, if you would.
Exactly, right. If you look at GAAP, generally accepted accounting principles, most leases contain a provision. I'm talking office and escalation leases. They contain a provision that requires the landlord to account for expenses in accordance with GAAP, okay? And that's as deep as they get into standardization, right? Which is a real shortcoming of most leases, because GAAP doesn't say anything about escalations. It doesn't say anything about operating expenses. What it does speak to is how are you supposed to treat capital amortizations. Now, I'm not a CPA, but Larry is, and he and I have had a ton of these conversations over the years, and so we do recognize that the industry continues to need this standardization process, and the BOMA endorsement is a real big part of that. If you read the introductory comments that I made to the first edition of the handbook, back in 1990, whatever, my stated goal in the introduction was to introduce standardization to the industry, to make it a better process and to make it more trustworthy for everybody involved. And we're getting there, right? The industry's getting there, but 30 years later, we still need to keep going there, because the GAP itself doesn't specifically set standards for each landlord to follow. So the industry has to kind of do it on its own.
Well, and as this generation coming up, so would say it's things that we did way back in the 1900s that we need to bring up to the future. Do accurate escalation processes impact a building's cash flow and overall value?
Absolutely. I mentioned that the second half of my career has been spent on investments, meaning acquisitions of commercial properties, office buildings, and other types. And a really simple way to look at the impact of escalations is that for every dollar of escalations that you bring to the table that the landlord is entitled to under the terms of these various collection of leases, for every dollar you bring to the table, if it's a Class A property, it's going to trade for probably a 5 cap. What that means is that in a sale, that $1 will generate $25 of value through the sale price, right? If it's a Class B or C property or building, and the cap rate will be a little bit higher, and the value per square foot will be somewhat less accordingly. But just running with that $25 a square, per $1 of revenue, I mean, it's a huge number if you think about it, right? So through escalations, if you can increase your true escalation revenue, by $10,000, you've increased the value of the property by $2.5 million.
Wow.
So, if I'm doing the math right, so anyway, it's a big number.
Yeah, that's a very substantial. Our final question today is, what is one piece of advice that you would give to property owners?
Yeah, my best piece of advice related to escalations for property managers is spend the time that you need to properly learn about escalations, because you can have an enormous impact on your income stream for your client, and also on your personal income stream, because it'll make you more valuable in your career. And you'll also improve the relationships that you have with your tenants, because they'll be equally inclined to trust what you're sending them in terms of invoices and expenses.
Why don't landlords use a flat rate lease? Isn't it a lot of stress for them to go through all these escalations?
So a flat rate lease works really well for certain kinds of real estate, like apartments. A tenant is typically going to sign a 1-year lease. The risk of inflation is much more knowable under that kind of a scenario. But when you get into a multi-year lease term, 3 years, 5 years, 10 years, you have to anticipate, when I say you, meaning the landlord and the tenant, they both have to anticipate inflation. Okay, it's going to happen. It's happened for the last 250 years, right? Or at least since 1913,
right,
to be sure. But and so there has to be a mechanism to protect the return on investment that was negotiated when the lease was initially agreed to and signed by both parties. And it's the escalation provision that protects both parties in that, and it serves as a method for that inflation to be allocated to the tenant. And why should the tenant get it, pay that inflation? It's because the tenant is who is benefiting from the building services that are being provided. The landlord doesn't benefit from them, but the tenant does. And therefore, they're the ones that should pay for the inflation associated with those services as they are incurred over the time frame of the lease. So that's the biggest reason. It's just the fear of inflation and the unknowns. And 2026, for the last 5 years, inflation has been a big deal. I think it's going to be a big deal for the next 5 to 10 years. I think it's going to take a long time for us to get that back under control. The type of lease that's used is important. As I mentioned, an apartment can use a 1-year lease, and office buildings and industrial buildings and medical office buildings, they often, by necessity, use multi-year leases, right? The landlord makes a long-term investment in tenant improvements. The tenant oftentimes makes a big investment in their own space, and that has to be amortized over a number of years, and the lease has to cover that time frame. And so there are two different ways, two primary ways, two different lease structures that are usually used in those situations. One is a base year lease, and the other is a triple net lease. And those terms get kicked around a lot. The reality is that the total rent that a tenant pays under a base year lease or a triple net lease will ultimately be the same total rent, okay? It's just a function of how is the rent structured. In a base year lease, let's say you have a 5-year lease, in year 1 often becomes the base year, and the landlord pays 100% of the expenses that are incurred during that first year of the 5-year lease. And if you then look at years 2 through 5, that base year continues. The landlord continues to pay that same level of expenses through the entire 5 years. But if there is any inflation associated with those operating expenses above the base year, the tenant pays that share, okay? But the total rent that they pay is going to be exactly the same as a triple net lease. In a triple net lease, there is it's a confusing term because it uses some of the same words. It's a base rent, right? A flat rent. Let's say $20 per square foot per year, each year of the 5-year term. And then the operating expenses, 100% of the operating expenses each year are added on top of that base rent, right? And let's say you have $15 in operating expenses in year one, total rent's $35, right? 20 plus 15. And then let's say it goes up by 3% or 5% or whatever each year. That dictates what the total rent is that's paid during that 5-year term. But between the two types, the total rent should match, in theory, dollar for dollar. So if let's say an office or industrial or medical office building owner were to choose to convert to a flat rate lease over the term of a tenant's lease, the landlord, by doing that, they assume 100% of the risk of inflation that occurs during the term of that lease, the entire term of that lease. It's good for the tenant. The U.S. government negotiates leases like that, right? But nobody else does, because landlords recognize that if they do assume that risk, their return on investment is going to go down. Now, one of the downstream problems of that happening is that if their net operating income goes down because inflation goes up in the operating expenses, they could end up in difficulty with their lender, because there are loan covenants that have to be met, every quarter, every year, with many of the loan documents that these owners have. And keep in mind, in these commercial properties, they often finance 60%, 70%, sometimes as high as 80% of what it takes to buy a property. And so loan covenants are something that are a real important issue for owners to be attentive to. And if you allow your net operating income to be reduced by the effects of inflation, you're putting yourself in a very difficult situation with your lender.
So essentially, a small investment in a product such as QTREN in the long run would be great value to these property owners.
It supports the type of lease that a landlord needs to have in place to protect their return on investment during the term of ownership that they have.
Bill, what are some of your closing thoughts today?
Well, for Larry and I, this is a real legacy issue. We're delighted that AOE is going to continue to survive. From an evolution standpoint, what makes a lot of sense to me, the first generation of this whole process for us was the creation of the handbook. And the handbook did a great job of establishing the concepts that are contained in leases and explaining those to users. And it also did a great job of establishing the steps that need to be followed in order to manually create invoices, right? Well, the second generation was the creation of AOE as a software product to automate many of the steps in the process, right? And to protect formulas and to create additional reports that can be used. I mean, that second generation created a whole lot of things. This third generation, the QTREN platform, building on top of AOE, it brings additional programming to the product. It brings, importantly, a lot of AI capabilities that are really going to streamline the remainder of the input process and just really make it a lot easier to use it. And with the continuation of this inflationary environment that we're in, I think it's really important that landlords find and use a product that they can trust that will protect their income stream and also maintain that level of trust with their tenant base, because they want to do everything they can to get the tenants to renew and continue that income stream. So I see it as the third generation and really the next step in the evolution of the whole escalation product for the industry. I think it's really important.
Yes, and that's the hope, that it's the bridge that keeps the tenants and the landlords' relationships strong and
Right.
keeps the buildings full.
Yeah, exactly.
Thank you so much for your time today, Bill. We really appreciate all the time you've taken to explain, and we've learned so much. I mean, there's a wealth of information that you have to share with us, and we really feel that this is going to be the ultimate way to carry on the legacy that you and Larry started, and we really appreciate